September 2008. The world watched as one of America's oldest, most respected banks vanished overnight. A company with 158 years of history, gone. Its fall would trigger the most devastating financial crisis since the Great Depression. This is the story of Lehman Brothers and how its collapse nearly destroyed the global economy. It all began long before the crash. Founded in 1850 by three immigrant brothers from Germany, Lehman Brothers started as a humble cotton trading business in Alabama. Over time, it grew into a Wall Street titan, financing railroads, helping giants like Sears and General Motors expand, and even advising the U.S. government. For more than a century, Lehman was a symbol of stability, wealth, and American capitalism itself. But in the early 2000s, something changed. Greed did. The 2000s were a golden era for housing in the United States. Banks discovered a new gold mine, mortgage-backed securities. These were complex financial products, made by bundling thousands of home loans together and selling them as investments. They promised safety, all backed by the seemingly unshakable belief that housing prices could only ever go up. Lehman Brothers saw the opportunity and jumped in headfirst. By 2006, it had become the #1 underwriter of mortgage-backed securities in the entire country. Billions of dollars were pouring in, and profits were skyrocketing. But behind the impressive numbers, a time bomb was ticking. Many of those loans were subprime mortgages, given to people who couldn't realistically afford them. Families were buying homes they couldn't pay for. Banks were lending money they didn't really have. And the entire system was building a house of cards. Inside Lehman's Manhattan headquarters, the mood was euphoric. Executives believed they had cracked the code to infinite growth. They leveraged everything they could to buy more mortgages, package them up, and sell them for a handsome profit. In 2007, Lehman reported record profits of over $4 billion. Its CEO, Richard Fuld, nicknamed the Gorilla of Wall Street, was hailed as a genius. He famously told shareholders, "We are positioned better than ever." But beneath the surface, the foundation was crumbling. By mid-2007, the impossible happened. Housing prices began to fall. Suddenly, homeowners started defaulting on their loans. The mortgage-backed securities that once seemed as safe as gold were now revealed to be nearly worthless. And Lehman Brothers was sitting on hundreds of billions of dollars in these toxic assets. Investors grew nervous. Clients began pulling their money out. The world started asking the terrifying question, is Lehman in trouble? Richard Fuld denied everything. He believed confidence was the key. If the world just believed Lehman was fine, maybe it would be. But the markets don't run on hope. By September 2008, Lehman's stock had plummeted by 90%. The company was desperate. Executives spent sleepless nights trying to find a buyer, Barclays, Bank of America, anyone. But nobody wanted to touch the toxic mess. Meanwhile, the U.S. government faced a monumental choice: bail them out or let them fall. Treasury Secretary Henry Paulson and Federal Reserve Chairman Ben Bernanke had already saved another bank, Bear Stearns, earlier that year. But they feared that saving every failing bank would set a dangerous precedent. So, on September 15, 2008, the U.S. government said no. Lehman Brothers declared bankruptcy, the largest in U.S. history. That single moment sent shockwaves across the globe. Markets crashed, investors panicked, banks, terrified of who might fall next, stopped lending to each other and to the public. Within weeks, global trade nearly froze solid. The collapse of Lehman Brothers didn't just destroy a bank, it destroyed trust, the invisible currency that keeps the entire financial world alive. Within months, millions of people lost their jobs. Homes were foreclosed, pensions vanished into thin air, trillions of dollars in global wealth evaporated, all because a handful of bankers believed the party would never end. They gambled with other people's money, and when the house of cards finally fell, the entire world paid the price. After the dust settled, investigations revealed just how deep the deception went. Lehman had used accounting tricks to hide over $50 billion in debt, all to appear healthier than it was. Executives walked away with millions in bonuses, while ordinary people lost everything. Richard Fuld, the man once called the Gorilla, faced Congress but denied any wrongdoing. He said, "We did everything we could." But for millions of people, those words were meaningless. The collapse of Lehman Brothers changed the world forever. Governments introduced new regulations, banks faced stricter oversight, and the term "too big to fail" became part of our everyday vocabulary. Yet, even today, many question whether the most important lessons were truly learned. The same financial giants that survived the crisis grew even bigger, and the same kinds of risks that destroyed Lehman still lurk beneath the surface of our global economy. The fall of Lehman Brothers wasn't just a financial event, it was a warning, a stark reminder that greed, when left unchecked, always ends the same way, in collapse. Lehman's name is gone from the Wall Street signs, but its shadow still lingers. It lingers in every market bubble, every risky investment, and every promise that this time it's different. Because in finance, it's never different. It's only a matter of time. Thanks for watching. If you found this story insightful, please consider liking this video and subscribing to the channel for more deep dives into the events that shaped our world. See you next time.